This year, December 2016 market update. So another good month for stocks. The S&P was up about 2%. International stocks were up about 2%. And the U.S. bond market stopped moving down. It was flat, and the international bonds were a little bit negative, but not bad. So overall, a good month to end the year. And for the year, the S&P was up about 12%. Global stocks were up about 8.5%, and both domestic and international bonds were up 2 to 2.5%. So positive year for all the major indices there, and Model 5 net of all fees and expenses actually outperformed both its 60/40 indexes this year. So very pleased about that. Quick 2017 outlook. There's a lengthier one in our newsletter this month, but we're kind of approaching 2017 with some cautious optimism, I would call it. We have a lot of caution in the markets due to valuations being so high. The PE ratio, PE10 ratio is at its third highest reading since 1871. And generally when it's up here, equity returns start to get muted, and it gets harder and harder to make money, and things get more volatile. So we're really watching that. The bond market seems to be range bound. The Fed raised rates again in December, but the bond market had kind of previously priced that in. Nothing really happened after they raised rates. The Fed keeps saying they're going to raise rates 3 times this year, 3 or 4 times. They've said that the last couple of years. They end up raising it 1 time. So we're not going to just assume that we're going to get those 4 rate hikes. We're going to approach that cautiously and keep our duration shorter so that we can make some money in the bond market, hopefully. And really the one main risk out there is China. We have a really strong U.S. dollar, and China's currency weakened 7% last year, is the most in a long time. And they're having to burn through their reserves. They burned through about $1 trillion last year, propping up their currency and trying to stabilize their markets. And China's really important to the global economy, and if they had to come out and devalue, or if they had to come out and do something drastic, it's really going to have an effect on the global economy, and that's probably the one biggest source of potential risk out there. But it's a big one, so we're watching that. So as we enter 2017, obviously very cautious, but optimistic that there will be money to be made this year, and the economy will keep growing.